Hello traders, welcome back to the channel. Do you feel like you are not able to catch the price trends at the best spots? And even when you do, your stop loss is either too much or too little, making your profit target a little too far beyond reach or too small, resulting in either bad trades or trades with poor risk to reward. In SMC, there is a concept that can help you fix this trade entry issue. It is none other than optimal trade entry or OTE. This technique relies on market structure analysis and Fibonacci retracements to identify high probability entry points within established trends. By understanding where smart money might enter the market, OTEs can help you get the best reward for your risk. So, in this episode, I will help you understand what optimal trade entry zones are, how to identify OTE zones on your chart, and how to use OTEs for your trades. This is going to be a very informative video, so watch it till the end. Also, like this video to support our efforts and subscribe to this channel if you haven't already. So without wasting any more time, let's get started. First things first, let us understand what an optimal trade entry is. So the optimal trade entry, as the name suggests, is a zone where you are most likely to get the best reward for your risk. Just like I have mentioned, optimal trade entry is basically a trading model based on the retracement of price in a trending market. More precisely, an OTE is the range between the 0.618 to 0.786 levels of the Fibonacci retracement. This zone is where your risk is neither too little nor too high, and it is likely to give you the best return. Now, the core principle lies in recognizing the temporary price retracements within an established trend. As you may all know, markets rarely move in a straight line. In fact, price moves in the form of impulses and corrections. The impulse move is the strong move, usually with large-bodied candles in the direction of the major trend, targeting the external range liquidities. On the opposite, the corrective moves happen against the existing trend direction, usually to target the internal range liquidity. Now, these retracements or corrections offer potential entry points for traders to capitalize on the trend continuation. So, by combining the market structure analysis, Fibonacci retracements, and some other smart money concepts, OTEs can equip you with a targeted and high probability approach to entering trades. The core idea of this concept is to align your entries with the potential moves of the big players, thereby positioning yourself to ride the next impulse trend wave they might be creating. In simple words, OTE help us to spot the beginning of the upcoming impulsive movements and define possible targets. But before we get into all that, let us learn how to identify optimal trade entry zones in your chart. Generally, due to the theory behind the optimal trade entry, OTEs are more effective when the market is trending. Keep this in the back of your mind. So, when the price is trending, it forms higher highs and higher lows in a bullish trend, and it forms lower highs and lower lows in a bearish trend. This makes it easier for you to identify OTEs in the trending markets rather than sideways market conditions. With this understanding, I will guide you on how to identify optimal trade entry zones or OTZs in your chart in two simple steps. The first step is to confirm a clear uptrend or downtrend using market structure analysis. Higher high and higher low formations with bullish structure breaks denote an uptrend, while lower low and lower high formations with bearish structure breaks denote a downtrend. Now, once you have a confirmed trend, the second step involves using Fibonacci retracement tool. You need to overlay the Fibonacci retracement levels on the price chart, spanning across the recent swing points. I hope you know how to use the Fibonacci retracement tool correctly. For instance, if you are plotting Fibonacci levels on a bullish swing leg, then you need to start from the recent swing low and proceed to the recent swing high. On the opposite, for a bearish swing leg, you need to start plotting the Fibonacci retracement levels from the recent swing high and then move to the swing low. Now, you'll be able to see all the important Fibonacci retracement levels between 0 and 1. Out of this, The OTE zone typically ranges from the 0.618 to 0.786 fib levels. Approximating this, you can consider it as 0.62 and 0.79 levels. This OTE zone between 0.62 and 0.79 fib levels represents a potential retracement area where prices might stall or reverse before continuing the existing market trend. The optimal trade entry zone uses different levels of the Fibonacci retracement tool. For an ideal OTE setup, I suggest you edit your default fib levels according to the settings I am about to tell you. So, fib 1 level would be the starting position of the swing leg. Fib 0.5 would be the equilibrium level that separates the premium and discount zones. Now, 0.62 fib level would be the OTE zone boundary number 1, and fib 0.79 would be the OTE zone boundary number 2. The optimum trade entry level resides within this OTE zone. The OTE level is the midpoint of the boundary number 1 and 2, which is the 0.705 or 70.5% Fibonacci level. So take note that the actual OTE level is 0.705, but anything between 0.62 and 0.79 still falls within the OTE boundary. Now, fib 0 would be our primary profit target level, and fib minus 0.5 or minus 0.61 would be our second target. So, if you're someone who views your charts on the TradingView software, this is what the OTE fib levels will look like to you. And this is how they would look like on the chart. Now, you can ask me why this OTE zone is such a big deal when trading. There are multiple reasons why this Fibonacci range is considered an optimal area for trading. The main reason is obviously the higher reward to risk ratio that it offers. For example, let us take the case of this bullish market structure. We know that no matter where our entry is within this correction or retracement, the first target for the trade is this recent high level of the market structure. When the price taps into this level, some traders will close their positions or lock in some of their profits, while others might go long anticipating a breakout. This can create a temporary correction, or it could even reverse the trend direction. Now, keeping this in mind, this level would be our first target. Now, if you enter in the OTZ, your risk to reward ratio would be reasonable. We always aim for at least 2:1 reward to risk ratio, and from this zone or OTE, we usually achieve this. That is why trading inside the optimal trading zone will give us a higher reward potential for the risk taken, and it provides a more rational trade within the discount zone in this particular case. Now, the second reason is that we get a much safer trade entry from the OTZ. Let us continue with the previous example. The fact of the matter is that market usually take out early buyers or weak hands and use them as liquidity for future price movements. So, waiting for the price to enter the optimal trading zone within the discount area and then looking for long trade opportunities will instantly increase our win rate. But as always, every strategy has its downsides. In this case, we might miss some trades due to this high conservative trading approach. But a missed trade is always better than a losing trade. Trading is all about probabilities. There is no absolute surety of something happening in the markets. Now, another important reason why OTE zones are optimal is due to the reasonable stop loss. See, in this bullish scenario, the best price level to set our stop loss to stay safe from the market volatility is below this swing low, because if the price breaks through this level, we will have a market structure shift and our trade would be invalidated. So the bulls will do their best to protect this level. So the closer your stop loss is to this level, the safer it is. And the OTZ entry will ensure that this stop loss is reasonable and within our risk tolerance. Now, let's learn how to make use of optimal trade entry strategy. I would say OTE is one of the most straightforward SMC tool with which you can take your trade entries. But there are different ways to go about this. I will teach you all of them. Starting off, we can enter our trades directly on the OTE with the help of other SMC concepts. So the first and most direct way to use OTE is to set your limit orders be it buy or sell limit orders depending on the existing trend at the OTE zone. It gets even better when this OTE zone coincides with another important SMC concept like fair value gaps or order blocks. Take this example for instance. The market is in an uptrend because we are seeing a series of higher highs and higher lows. So the first step of trend confirmation is complete. Now, we need to draw the Fibonacci retracement with the OTE settings from the most recent low to the most recent swing high. Here you can notice how our OTE zone coincide with a bullish fair value gap roughly at the same level, confirming our trade. This is a powerful setup because when the price pulls back to these areas, they will act as a support and will likely push the price higher. Now, there might be instances where there will be multiple fair value gaps, like in this case. In such a scenario, we would most probably look to take an entry from the most extreme fair value gap that coincides with the OTE zone. This is because there is a higher chance that the price might use the first fair value gap as liquidity grab and trap retailers who went long there. So, our approach would be to wait for the price to retrace all the way down to the extreme fair value gap and enter the long position there. So, the next step is to place a buy limit order at the 0.62 OTE level, which is the upper boundary. If you are very confident about your chances, then you can lower this buy limit order to the 0.705 OTE level also. You can set your stop loss just underneath the most recent swing low or below the Fib 0 level and place your first profit target as the previous high or Fib 1 level. And as you can see, the price dips into the OTE level and immediately rises to continue its bullish trend. Now, the advantage of using the OTE this way is that it simplifies things. You don't need to worry too much about other complicated trading strategies or concepts. You just confirm the trend, map out your OTE and fair value gaps, and then set a limit order in the direction of your trend. On the flip side, this strategy does not always guarantee trade entry opportunities. The price won't always return to the OTE, so you might miss out on some chances using this method. But like I have mentioned before, no trade is better than a losing trade. Moving on, let's learn how to combine optimal trade entry with market structure shift. So here, the market was in a long-term downtrend, but then price first failed to create a new lower low, which indicates the loss of bearish momentum. Then, the price broke the supply level to the upside. This is a bullish change of character, and it shows that the sellers are no longer in control and suggest a potential reversal to the upside. Now, we need to wait for a bullish break of structure to happen. And once we see a break of structure above the previous swing high, it indicates that the buyers are now completely in control, marking a complete market structure shift from bearish to bullish. Now, our bias is to look for long trading opportunities to benefit from the bull market. Even though the price has a high chance of continuing upwards, we can't just enter at any random location because we could still get stopped out if we enter at the wrong place. This is where we make use of the concept of price swings and optimal trade entry. In this case, our directional bias is bullish and we have enough space before reaching the next important level, which is this high right here. So we can apply the Fibonacci retracement tool to this latest impulse swing leg and then set a buy limit order at the 70.5% or 61.8% Fibonacci retracement levels. You can set your stop loss below this swing low and you can place your first target as the previous swing high. This setup can be further enhanced if there is a bullish fair value gap or an order block coinciding the OTE zone. So this is how we combine optimal trade entry concept with the market structure shift concept to enter high quality trades. Another method you can implement is using multi-timeframe analysis. In this particular trading setup, we will use 2 timeframes to enter into a trade. Most of our analysis is carried out on the higher timeframe charts like the 1 day or 1 hour timeframes, and then we will zoom into the lower timeframe chart like 15 minutes or 5 minutes to find trade confirmation and to enter into a position. Now, let's take an example to understand this better. So this is a 1 hour timeframe chart and we have a clear uptrend. Let's apply the Fibonacci retracement tool and mark the optimal trading zone. Like I have mentioned earlier, when the price pulls back to the optimal trading zone, we will then zoom into the lower time frame like 15 minutes or 5 minutes to find an entry. If you notice, on the lower time frame, this correction move may appear as a downtrend. So our goal is to find signals that indicate the downtrend is over and that we can enter a long position in alignment with the dominant bullish higher time frame direction. So what we need is a market structure shift on this lower time frame chart. When we see a change of character happen, we can consider entering a long position. In this trade, we know that the higher time frame trend is bullish and we are in the optimal trading zone. Then you can place a buy limit order at the OTE area and set your stop loss below the lowest point before the market structure shift happen. Now, combining optimal trade entry with other SMC techniques such as fair value gaps, liquidity, order blocks, breaker blocks, or any other entry reasons that you can use to get more confluence can greatly improve your chances of trade success. Now, the OTE is one of the most straightforward concept in ICT SMC. Yet, using it in isolation is not the best approach. You'll need to learn and combine other SMC concepts with OTE to get the best out of it. Even non-SMC trading strategies can work well with OTE. So do your own backtest and see if it works for you. So this is all you need to know about the optimal trade entry concept. In the next episode, I will talk about volume imbalances, which is also known as micro fair value gaps. So stay with us to find out. Meanwhile, if this video was informative, kindly hit the like button so that the YouTube algorithm knows that you're interested in these type of videos. If you have any doubts or suggestions, do mention it in the comment section. Also share this video with your friends and fellow traders. And if you're new to this channel or you have not yet subscribed, please make sure to subscribe to help us complete the 1 million goal by the end of 2025. I will see you guys in the next episode. Till then, bye.